Okay guys, 14th of April, and we're going to have a look at our US indexes, the E-Mini SP500 and the Nasdaq. So as always, we're going to have a quick recap of the S&P first in relation to our Sunday analysis. Then we'll move on to looking at the market for the trading week ahead in terms of day trading, and then we'll do the exact same thing on the Nasdaq. So for this market last week, what were we looking at? The first thing was this sloping resistance line that the market had been continuing to hold below. For the market to start turning more bullish, we were looking for a break up above this level. Now on the Monday, what did we see? A very strong move up and a test at the 2647 to 2665 level that we marked in, and then the sellers came back in a strong way. So first of all, on the Monday, we had a nice false break of this, rejection from our key zone. On the Tuesday, we had another strong move up. Again, rejection started to come in from this zone, but this time the market held onto the break. So on the Wednesday, the market is rejecting again from our zone all the way back down. Where is it testing at now? 2627 to 2620. Confirmation of the break. It's lining up with the sloping support line. Something else we were looking for, and you can see the buyer stepping in. Thursday and Friday, strong moves up into where our next zone, 2670, 2680, rejection, rejection. Now with Friday's rejection, similar to the Nasdaq, I want to be a little bit careful because certainly toward the end of the day, a lot of this rejection is most likely just down to uncertainty. The whole Syria issue was hanging over the markets going into the weekend. Nobody really knew what was going to happen. So most likely nobody wanted to hold on to a very strong bullish rally. And we can see it's rejecting at that key level where we've had the nice double top, center of that double top. Okay, so coming into next week, what are we now looking at? Well, first thing is this zone right here. It really looks like it could now be adjusted. So let's make it. So we're now changing it to 2664 down toward around 2653 to 52. Let's mark it in with a rectangle right here. So holding above the trend line at present, but we are testing at very key levels of resistance. We're going to go over all of that in a minute, but let's get the zones sorted out first of all. We've also got a level here at 2643. So what we're basically doing is taking that larger zone that we had and we're splitting it into two. Now, this zone could arguably come all the way down to 2633. What I'm going to do is I'm going to bring it just up just a little bit to 2636. So the 2633, the reason for it is this candle right here. I've had a nice bit of rejection off of this candle. It's giving us a clue that potentially that is where the start of the zone is. But with more recent price action, with the little holding price action here, and then we've had a couple of spikes down in tests last week. Let's keep it to 2636 to 2643. Okay, so those really are the zones going into next week. We could put another one further up because if we do start breaking up from this key level of resistance now, it's likely we'll see another strong bullish bounce. So we've got one sitting at 2709 to 2714. I'd say that's more minor of a zone, and then we've got one sitting up above there around about 2722 up into really it's going up into 2730 right here. You can see the market coming down, multiple rejections at this level before we sell off. We've had a nice spike up into the level right here, spikes up here, and we've had one that breaks up a little bit higher, but for me that's starting to get in toward the next levels of support and resistance. Okay, so what are we looking at? Well, the first thing is at present, we haven't really broken up above and held up above this key level at 2664 to 2653. For this market to turn longer term bullish, we really need to see the market pressing up and holding up above this level. At present, this 2670 to 2680 remains very key resistance. And worthwhile looking for those potential bearish positions. Now this zone also, if we are coming up and testing here and pulling back, it's still worthwhile looking for the bullish bounces off of this level until we start to fail. Now if we start getting above this level right here, then the market is starting to look more bullish. It then becomes worthwhile looking for the pullbacks and the bullish continuation up into at least 2692 to 2696, which is our zone up above. But really, if we're breaking above this level in the medium term, I would then expect S&P to be coming up toward 2710 to 2714, right up here. But at present, we are not breaking above this level. It's not giving us those key bullish signs as yet. So it remains very key resistance, and it's worthwhile selling into. Now, if we start failing at this level, once again, it becomes worthwhile looking for the sell positions and moves back down toward 2643, really 2645 to 2636. Again, good level of potential support for those bullish positions. If we're breaking down below this level, again, good potential resistance, I'm happy to say, but I want to watch out for the MA200 on the daily time frame. It's going to move around next week. It is dynamic support and resistance. Want to be careful where it's sitting for potential reactions. And then if we are starting to fail at that level and coming down to test right here, really, it's the last main level of support. So we've got another level at 2612 to 2610 right here. But if we're starting to break down below this level now, it's not the best sign for the S&P. And it would be worthwhile watching for the resistance and the moves down once again. Certainly into 2609 to 2612. Potential support. If we're breaking down below there, again, we're coming down into 2600 to 2585, which is very key support. If we're failing at this level, then the S&P is looking much more bearish moving forward. Really, at least 2565, 2552. But then if we're failing there once again now, after trying to break higher and breaking out of this trend line, I would then really be expecting us to start coming down toward 2488. Okay, so that's everything for the S&P. Main things really for next week are this zone at 2681 to 2671. It's a very key resistance at present. If we're starting to break up above there, then it becomes worthwhile looking for the bounces higher. This zone at 2664 to 2653, it's also holding a strong resistance at present. But if we're breaking up above it, it's also worthwhile looking for the bounces from this level into the zone up above. But it also remains very key resistance. This is really the main section of this market now, moving forward. Let's mark it over here, right here. Okay, guys, let's now move on to the Nasdaq. Okay guys, let's look at the NAS. So we'll do a relatively quick run through of this because it's a Saturday and I need to go and hire a kilt for a wedding, so I don't really have a lot of time at the charts, but we'll still go through everything. With the Nasdaq, it's set up exactly from that Sunday analysis video. What we're looking at again was that sloping resistance line, and then the market started to break. So it broke up first of all on the Monday, it rejected just up above our zone. On the Tuesday, again, we came up to that 6639.6 level. We rejected from that area right there. And then really, what I was looking at was potentially this was turning into a shoulder, a head, and a shoulder. So up above this whole section here, exactly as we went over on the Sunday analysis, with the lines right here, if we broke up above this level, we could then look for the pullbacks. So right here, the pullback, right here, the pullback, and then the bounces higher. And we're being a little bit careful of 6640, but I went over how if we do break above this level and get the pullback, it's very likely we're coming up to 6675 to 6710, which we got on the Thursday and again on the Friday. Now on the Friday, I wanted to be a little bit more cautious, in all honesty. Less keen to sell from that level because we already had the reaction. Wasn't too sure how the market was going to react, as I mentioned, going into the weekend with everything going on in Syria, so just being a little bit more cautious. Really the preference would have been selling into the market if we'd got a little bit higher up toward these levels right here, which are very, very key resistance areas. So let's look at our zones. And we're going to make a few changes because what we're doing is we're taking the evidence of what has happened on the market and we're just adjusting to suit. Now, really, I don't want to bring this zone down too much. We did have a breakdown on the Wednesday. However, for me, it's still pretty key where it is sitting. Really, we can actually maybe bring it up a little bit toward here. Let's see if we can move this without moving the line. Nope. So basically like this. The reasons are, although we had the breakdown right here, I'm more interested in how the market has been reacting numerous times. So we rejected on the Monday from this level. The Thursday and the Friday, again, we've been testing at this level. So really 6605, I'd really say a little bit higher, maybe 6610, down to 6565. It's at present, we're holding up above. It's a key level of support because we're still looking at the potential for this head and shoulders pattern. The shoulder, the head, the shoulder. So, as long as we're holding up above here, we're really testing at the whole level of support from that pattern. It's worthwhile looking for those bounces. And then if we're breaking down below this level, it's potentially the warning sign that the pattern is starting to fail, at least for a pullback to test at previous key structure. Worthwhile looking for the resistance and the moves down. Now, for that, we'd be a little bit careful of the low right here as potential support. So let's have a look. The low is sitting at around about 6540. But really, if we're breaking down, it's still worthwhile looking for the resistance and that potential stronger move back down toward 6495 to 6472. If we're starting to break down below here, it would be suggesting that potentially this breakup is not going to hold. And we would then expect that move down to the 6495, 6472, and potentially 6430 to 6400, which again is very key support right here on the Nasdaq. And if we're breaking through there now, it's again similar to the S&P, not looking good for the Nasdaq. I would expect that stronger correction back down toward this central point of the very large double top, which is sitting at 6342 to 6295. Up above, key resistance. It remains very key resistance. We can actually bring it up just a little bit. Let's make it 6675 to 6716. A couple of rejections already. Yeah, very key resistance. If we're breaking up above. And by the way, worth going over. So on the Friday, being more cautious, less keen to sell. You can see the market had a huge sell-off from that level. That's all part of trading. You don't come into the market and every single day, everything you're looking to do is going to be perfect. It just doesn't happen, you know. But what I do is I look for the obvious moves, and then if I'm not sure, rather than trying to trade off of it, I just hold back, because I'd rather miss a trade and also miss the potential loss than trade off of something I'm not confident on. Because, you know, when you start doing things like trading off of areas you're not confident in, and it starts to, you know, you start to make mistakes, you start to get those losses, that's what leads, or is what used to lead for me when I was a beginner. It's what I identified to emotional trading. And it's exactly what leads to emotional trading for beginners. You know, it was all about identifying where my weaknesses were. And once I found them, I could start building an ability to trade effectively. Okay, so right here, 6636, 6650. Really looking at it as a little bit more minor in terms of support, certainly. But if we're breaking down below, still worth watching for support, first of all. But if we're breaking down below, again, it's a good level of potential resistance for the moves back down into this very key level, 6605, 6564. This level is very important moving forward. Really, it's a very key resistance. If we're breaking up above, then it's very likely we're coming up to test at the previous swing, right here. I'd say really, let's have a look, 6755 toward really 6800, sorry. That's a pretty significant level of resistance on the Nasdaq. If we're breaking up above here, it's very likely we're going to see the test up into that level. Now, we've got a little spike down here, but really for me, this is the main level. Lining up with the previous swing, it's lining up with the strong level right here. Yeah, I'd be happy to look for the bounces for the market to start moving up once again. And I just use the levels here as a little bit of a cautionary management point. Okay, so those are the main things on the Nasdaq. Really what we're looking at is this zone right here. Is this going to hold? You can almost call this the pivot point. at present. So the pivot point, whilst above here, we're still looking a little bit more bullish. If we're starting to break down from here, the market's starting to turn bearish once again. Really good for bounces, really good for rejection if we start breaking down below. Next, very key resistance is here. Breaks above, it's suggesting those bounces higher once again, or at least attempts to get back up to these levels. Breaks down below here, I'd expect the move down to 494 to 472. Breaks down below there again. Worthwhile starting to look for potential moves down to the MA200. Okay guys, that's everything for this week. A little bit of a faster run through. Still went over everything. Hopefully, as always, you found it helpful. I hope you all have a great weekend and also a good trading week next week. I'm James Orr, and thank you.